everybody. Welcome to the Stock Market Morning Prep video for Thursday, June the 5th. Well, we're going to have a big risk event that's going to happen any minute now, depending on when you're hearing this video. ECB rate decision following a speech this morning. This is Thursday, June 5th. That's going to definitely be a market mover. I think that's what the markets are anticipating, to have some sort of movement here. I mean, we really have been just grinding straight up higher. All of the ETFs, no stocks, very little stocks have been moving, and we've just been sitting here, status quo here, just waiting for something to happen. It's been quite frustrating of late, and we are hoping that we can get some movement here. Now we're just kind of sitting around, waiting patiently. But what I want to do is that I want to be a little bit more proactive. I look pretty much most of the day for trade ideas, and I start building watch lists for when the markets do start to open and it start to actually move again. If we get some sort of at least a little bit of a pullback, which I personally think that it's in the cards, nothing actionable. I think it could be any day now. Maybe not this week, but I could rest assured that volatility will pick up. It cannot stay this low and this extreme for this long. And that's where the red flag comes in, especially when you have bonds well bid up, really gold not doing much. And then, of course, you have the healthcare, utility, and consumer staples well bid up into making new highs. To me, that's a warning sign. And when you have stocks that are not moving, in general, stocks are not moving. ETFs are moving, and that's not a good sign as well. The market participation is less and less, and money flows into bonds, consumer staples, utilities, and healthcare. That is not a good sign. So therefore, what happens? We're not trading utilities, we're not trading bonds, and we're not trading, consumer discretionary stocks. We're looking for stocks that are trying to make some good intraday movements, and we're not getting it. So I want to talk more about watch list stocks and look radar stocks that are going to be on the radar in the coming sessions. I'll run through the quick indexes, guys, but honestly, there's really not much going on here. Spiders, again, 11 days straight up. Right now, we're up in the pre-market at $1.25. It's just absolutely insane that I have not seen how a market can go straight up for 12 straight days, really on no volume and really no catalyst. The only catalyst I could say, to be fair, would be the Bank of Japan talking down their currency, so the yen started to break down a little bit. But I mean, to me, this is a bit excessive. When you have no volume, that's the reason the algorithms go crazy. And sure enough, here's what you have. We have well below average volume here for the last 11 days, and we have just been going straight up on no volume. That is not a good sign. Transports came off a little bit yesterday. We do have, as you can see here, a movement again back up to the upper end of the range. Very low volume, and at its extensions, I think that the transports are indeed ready to look for at least a 20-day moving average. That's my opinion, and that's what the charts are telling me. So I'll be looking to sell the transports when and if, of course, the time is right. If you want to nibble a little bit here, obviously your stops would be right up in this area here above the upper trend line. IWMs now broke this bearish symmetry. And it looks like it's kind of pulling back a little bit, holding that 200-day moving average. It could even look like a bull flag. I think I mentioned that yesterday. As you can see here, we have a bull flag pattern. So this is a bullish pattern at the moment, but obviously could break down. And again, having a risk event today, and of course non-farm payroll numbers tomorrow, that also could be a problem too. So just be aware of that. Qs. Well, the Qs has been holding up well because of Apple. Apple's going into a split tomorrow at the close. They'll split 7 for 1 for Monday, so everybody's bidding up Apple. So that to me is a skewed index anyway. Diamonds, what can you say? Doing okay, sitting right at the upper end of the range, double top. But again, needs to. All of the markets can't go straight up for 18, 20, 30 days in a row without even one pullback. That's not healthy for the markets, because when that time comes, you'll see that 18, 20, 30 days up, whatever it would be. Markets will roll over, and risk off happens very fast, and you'll wipe out all those gains in one day. And that's the problem here that we have. So let's go into some watch list stocks. I'm starting to watch the solars again. I like the solars. Even if you look at like a First Solar looks pretty healthy here now, breaking out of the Bollinger Band, breaking out back above the 50. And the 8 and 20 starting to cross here on the daily chart. I want to see more volume, but this is enticing me to look for pullbacks in First Solar. So let's keep that on the radar. First Solar. Home builders are looking pretty good here. So I do like the home builders. What I want to show you here is the home building chart with the lumber. Now this is lumber still breaking down here. So the ITB, which is the home construction index, is holding up pretty well. If we don't see lumber prices start to break back to the upside, then I think the ITB will start to roll over like it did here. So what I'm waiting for is lumber prices and the ITB to catch up together as one, like it's done here and then like it's done here. Right now we have major divergence happening from the two, so we have to get revision back to the mean here. Once we get this back, then we can look a little bit better for the home builders. But looking better, looking constructive here, and I do like them going into the spring and summer months. And as you can see here, Pulte Homes back above the average. Now remember, if the lumber really starts to break down a little bit, they'll follow suit for a little bit. But remember, that's also it does bode well a little bit because the materials are a little bit cheaper. But if you're not selling houses, it doesn't matter, right? If there's no demand for housing, or there's less of a demand, so that means less of buying lumber, it's not going to matter either way. So it's going to pull each other back and forth. But keep an eye on Pulte Homes. I like Pulte. Toll Brothers, another one I really like, and Lennar, one of my favorites. I like Lennar here, and I love this base. You see, this is what we're looking for. But as you can see, we haven't gone anywhere in any of these stocks in these sectors for months, and it's just been like pulling teeth, looking to get a positive trade going. At least have the the probability going on your side here. But you can see here, very, very light, and now we have that pullback. So what I'll be looking for is a breakout above this now new consolidation for a move to challenge the highs. I'd be looking to get into that, or a pullback back into the 20 to 50. Okay, so Lennar, another one of my favorites. Let's take a look at the banks. Now, as you notice, if you recall, I had mentioned early in December, banks, solars, and home builders are my three favorites for this year. And remember, they come in and out of favor during the course of the year, but I do like them. So XLF a little bit extended, but let's look into it and see what we can come up with. And Morgan Stanley is my sets out perfectly. Nice volume break yesterday. Now let's see if we can break this consolidation. Morgan Stanley would be on my list here to look to buy on any pullbacks or a breakout and a back test. Okay, Morgan Stanley. Citibank, again, as you know, on my list. Beautiful consolidation here. Okay, I do think Citibank can challenge that 200. Remember, anything below is a counter trend trade. You need to know how to trade those. If you don't know how to trade them, stay away. Okay, but for an intraday move, if we can get some good movement in the banks, definitely look at the banks. Goldman Sachs, take a look at Goldman. You can see Goldman here, same thing. It'd have to break above the 200, but watch Goldman. It's one of the bigger players in the bank sector. If Goldman starts to break, then you'll get Morgan Stanley, some of the brokers, Citibank, Bank America. They will start to move as well. Okay, so I'll be looking for that sector. OIH, just to show you, one of my favorites. We have higher highs and higher lows. Looks great, but extended. I'm not going to buy anything here. So right now, I'm going to be staying away from OIH. But in the space, what hasn't really moved is ATW. Okay, so this is something that I like here on this breakout that we had. And sure enough, we have a nice little breakout. But again, it's below the 200. If we can break out of these two areas here, I think you're going to have a real big trade in ATW. So I'm writing that down for my list. Okay, let's take a look at a couple more. We have APA, Apache here, kind of extended, so I'm going to look to step aside on that. And then USO. I really like USO here. But I would like to see this consolidate a little bit. But you can see what's been happening, right? Higher high, higher low, back, we pull back, try to break out, pull back, try to break out, pull back. And what's happening? And every time we get closer to these upper end of these area resistance bands, we're making higher highs and higher lows. So really constructive. And I like USO here. If crude oil breaks out, obviously USO was a tracking ETF for it. It'll start to move higher. And I'll be looking for a position in USO. Last I want to show you is a dollar, euro dollar. Obviously, on this rate decision, we're going to have to keep a close eye. They were very hawkish, but they did come out with some inflation numbers stating that there was virtually no inflation. So who knows if they become a little hawkish in their dovish tone from the last time they spoke here, Draghi was speaking, this thing could explode higher. So euro dollar, I'm going to be keeping an eye on for today for possible a risk on, risk off type of feel. Okay, and remember, guys, non-farm payroll numbers are coming out tomorrow. Really keep a light book going into tomorrow. You really don't want to get caught. They come out at 8:30, and I think between today and tomorrow is going to be a market mover for sure. And then next week, let's see if we can get some sort of a trend to confirm. Now we know we have an uptrend, and we don't want to be short the market here unless you're hedging. If you are looking to short something, short relative weakness to what the market is doing, or look for stocks that have been base and that have already sold off, and then look for base breakouts. Okay, that's exactly what I'm looking for, but they are far and few in between, and they are counter trend. So that's why you get stopped out a little bit more, and as you keep getting stopped out, I understand it gets a little bit monotonous, and you're like, ugh, you know what, let me just wait for something, and then sure enough, the day's over already. So, and lately we've been having one moves between like 9:30 and 10:15. You have one move up, and if the move is going to be confirming, you wait for the confirmation, nothing happens, and we go sideways all day, and that's what's been happening. So it's going to change, and it's going to change. When it does change, it's going to change rather quickly, so definitely be on your toes. Have a great day, everybody. We'll speak to you tomorrow. Take care. Good luck today.